Welcome to Investors Insights. Today we're going to be talking about the IPO market. We've had a surprisingly large amount of client interest in 2019's IPO market. That's probably a good thing. People are interested in stocks that are coming public, but there's also this kind of underlying fear. Is this like 1999, 2000, where we had the dot-com bubble and then very big pop of that bubble? And actually, you brought up some really good points this morning where you've looked things up and shown where this is very different from 1999.
It is a new world, and hopefully we learn from it. Our portfolio team follows some really good research on IPOs by Jay Ritter, who's an expert in IPOs at the University of Florida. And he makes two excellent fundamental points about how the dot-com era looked. And again, as Trey said, that's 1999 to 2000. And as a footnote, during that time, 547 companies went public through IPOs. And it seemed like there was one a day because there almost was one every day. So it was blowing and going back in that era. But what was different with those companies that is different now, with some of the ones like we saw Friday and some coming out the rest of the year? Two fundamental points, according to Jay Ritter. Number one, the average sales size of the company now, today in 2019 going public, is 173.6 million. Back in the dot-com era, it was only 12 million. Those companies were tiny.
More than 10 times.
Exactly, they were tiny. And it's like Trey made a good point this morning. With that sales size, your business concept now, with that sales size, you've monetized it, and it's much more proven now.
That's right.
So it's a much larger sales size, much bigger battleship you're sailing on, so to speak, from sales. The second one is the age of the company. You know, back in the dot-com era, you saw people who were extremely young that had companies seemingly not too long that were going public. And the reason you felt that way, it was true. The average age of a company in the dot-com era was 4 to 5 years. They hadn't been around that long at all.
Wow.
The average age now is 12 years.
Yeah, I feel like back in '99, the first time you heard of a company like Global.com or was when it went public. That was their coming out party. Now these companies have been around for years, and I think they've become well known to the consumers.
Yeah, they have. I mean, a lot of them are household names with proven business concepts. And now they're going public. Trey and I were talking about this morning, what you always have to do is when you're evaluating these, this is still a higher risk category than other things. So what you always have to do is you have to look at them individual and case-by-case basis. What's the business model? What's the management? What does the balance sheet look like? What does the income statement look like? All of that. But in general, we would say you would have less risk as a category now than you did then, just because of the sale size and average time in
definitely
business.
not a recommendation that you should go out and put your nest egg into one of these companies. These still are, even though they're older, bigger companies, these still are unproven in terms of the public market companies. A lot of them are burning through what we call the cash burn.
Correct.
They've got a lot of assets, a lot of sales, still not making money. So while it's not as risky as it was 99, 2000, there's still a lot of risk in the IPO market. What would also be fascinating to see is the individual investor coming back to individual equities.
Yes, great point.
Index funds are not able to buy these IPOs because there's no track record. So if you think you're getting a piece of one of these large companies because you have your index fund, you're not. And so will this bring back the excitement at individual investor? That'll be fascinating.
Like we saw Friday. There was
a
a ton of energy in the market Friday just because of what it was and the business concept.
And we saw our clients call us about that.
Yeah,
and so that's kind of a proof of energy, which is great for the stock market. You've got supply and demand. If individuals are coming back, increases demand that may bring all the boats higher as a rising tide.
Absolutely.
So it's something we're watching very closely. I think it'll be very impactful. These are very large, well-known companies that everyone's kind of heard of. Will they come out and have a very strong opening? We'll see. I mean, we can't predict the future. It just seems like a lot different than 1999, 2000.
And it is, because in very general terms, is like we said, to summarize, sales are much bigger and time in business much longer.
That's right.
That's bound to help some.
So we hope this has been very helpful to you. We always love talking about these topics. So if you ever have any questions, please call us. We'll feel free to talk in more detail or talk about your personal situation. We hope you have a great week. Thank you so much for watching.